Take me just 1 second. Hope you're doing well. And I think we should be live on Facebook. Hi everybody. Welcome to our weekly videos. I'm Sami Abasad, Director of Education at T3 Live. Hope you're doing well. Hope you're having a nice weekend. We're going to do what we always do, which is go over the market and go over some amazing swing ideas for next week. I have a lot of ideas for next week, so be sure to stick around until the end. If you find benefit in today's video, I'd appreciate it if you hit the like button. And without further ado, let's go ahead and get started. As always, just a quick standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. But with that out of the way, we're gonna go over the market and share with you my swing ideas for next week. Also in the description, I copied and pasted the list that I'm gonna go over right now with you, so you don't have to type it up. Just go to the description of the video, copy it, paste it into your watch list, and let's go over it together. Also, I want to let you know that I'm going to be hosting an open house next week, completely free. Feel free to join me. Again, completely free. Link to register for the open house is in the description as well. Okay? But without further ado, let's get started. The market had an unbelievably bullish gap up, a gap and go on the day after election, so on Wednesday, I guess, right? And then Thursday gapped up again, and then Friday Friday dropped about over 1%, and then came all the way back up and based at the highs. So no matter how you look at it, the market was really, really bullish last week. Now let's just spend 1 minute analyzing what happened with the market. Did the market get the result that it wanted? Did the market initially gapped after elections because I think Trump was initially thought to be the winner? Okay, that so far is not the case. And notice the market didn't retrace at all. But okay, did the market get the election results that was billed to be the ideal scenario? No, I would say the opposite of that is what happened. We got an election that was too close to call, a contested election, right? That was too close to call, a divided government, which is usually a good thing for the market, because then they can't pass legislation that would affect the market. But this time around, it was billed as a positive thing because, you know, if we had the blue wave, then they said we were going to get the largest stimulus ever, a lot of spending on infrastructure, all that stuff. So the ideal scenario was for either a blue wave or, I don't know, for Trump to win and keep the Senate. But the point is, we got probably what was billed as the worst case scenario, an election too close to call, a divided government, and yet the market gapped up. Explain that to me, right? Explain that to me. Not only that, when the market, you know, on Thursday and Friday, when it looked like maybe Biden would win, maybe Trump, right? It still didn't care. It gapped up on Thursday, another 2-3%, I think close to 3%, on top of the 5% on Wednesday. And then on Friday, when it dropped a little bit, it went right back up and based at the highs. Incredibly bullish. What does that tell us? That tells us that the news doesn't really matter. Okay? What matters is whether there's more demand or supply in the market. And my guess is that probably institutional money wanted to buy the market regardless of what the election result was gonna be. They were just waiting for the elections to pass and then immediately get back into the market because there's nowhere else to put their money, right? I don't know if you know this, but hedge funds rarely go to cash. Most of the time they're invested. It's just that they rotate from growth to value, from tech to whatever, to retail to financials, but they rarely ever go to to cash, because if they go to cash and the market keeps going higher, then they end up missing out. And guess who loses their clients? The hedge fund managers lose their clients if they go to cash and the market keeps going. So they rarely ever go to cash, and so they rotate. But the point is, it looks like, even though the market was pretty weak, right? It was just waiting for elections to pass for institutional money investors to get back into the market. So again, it just goes to show you how useless listening and watching the news is, and news pundits and economists and whatever. Completely worthless. It's worse than worthless, because it actually clouds our judgment. It's better to trade the what, not the why. Trade what you see, regardless of the reasons. Trade what you see, regardless of the reasons behind it. You don't need to figure out why the market is moving. Just trade what you see. Trade the pattern. Trade the charts objectively, without even. It would be even better if you didn't know what the news was. I don't know if you read that book. Very nice book, little book. You won't learn much from it, but there's quite a bit of insight in it, called How I Made $2 Million in the Stock Market, by Nicholas Darvis, or I think is his name. And the story was, when he was in Paris trading the US market, he would get the newspaper delivered to him at daytime in France, which was at nighttime in the US. He would place his trades based on what already happened without reading the news. When he moved to New York, thinking that being close to the exchanges, having direct cables in news, immediate news, he lost $100,000, right? Having immediate news, access to news, he actually did really poorly. When he traded without knowing the news, he did a whole lot better. And it's still true today, for sure, no doubt. Now, of course, we're curious. We sometimes go to Bloomberg or whatever news we watch. But the truth is, it's completely useless. It actually is worse than useless, because, again, it distorts our thinking. It clouds our judgment, and we start to place trades based on what we read or what we watched. It's better to not even do that at all. Okay, I don't want to spend too much time talking about it, but I just thought it was interesting, the reaction we got after elections, even though the election was too close to call, right? Which was billed as the worst case scenario, because if it was going to be too close to call, or if Trump was going to lose, he's going to contest the election, and that was like going to be the worst for the country, whatever. I'm not trying, absolutely zero politics here. I'm not being political at all. I'm just saying, and then the market reacted in such a positive way. It means it didn't really care about the result. It cared more about just that news event passing, and then getting in right after that. Amazing. All right, let's go ahead and take a look at the market now. Actually, sorry about that long rant, but I think I hope you find it useful. So we said the market very bullish. We are at resistance. We are at resistance, no doubt. So it would be ideal if the market actually went sideways the entire week, this next week, and then the following week broke out. Okay, so what would be ideal by far is if we put in a narrow range bar next week, which would make actually for a slow trading week usually, if the market doesn't go anywhere. But that would be ideal, is if we went sideways, we put in a narrow range bar, and then the following week we triggered a 1-2-3 pattern. A 1-2-3 pattern, we're going to talk about it in today's video, is when you have a breakout bar or an igniting wide range bar like this one, right? A narrow range bar, a resting bar to digest the move, right? And then another igniting move, the next bar, in this case the following week, if we're talking about the weekly chart, which I am, right? So that would be the ideal setup to look for. Will we get a narrow range bar next week? I don't know. That would be my expectation, is to get a narrow range bar. here, and then that would allow the 20 MA on the daily chart to catch up and then break out the following week. So that would be my expectation. Of course, we have fluid news right now, a lot of probably news. Trump hasn't conceded yet, so who knows, right? Who knows? But that would be the ideal situation, and that's what I'm expecting to get, is a more of a sideways market next week. Q's SPY look almost identical. What's impressive also is gold reclaimed the uptrend, went back above the 20 MA, and I think triggered probably a weekly buy setup. Yes, it's not a very good weekly buy setup. I don't think gold is going to go right back up to the highs, but pretty bullish. Was not looking so bullish on the daily chart as of last week, and then, or the week before, and then reclaimed that uptrend on the daily and the weekly, and now bullish. But we need to digest the move a little bit by going sideways or pulling back a little bit, allow that 20 MA to catch up, and then get a breakout probably on gold. What's also really amazing, impressive, is the chart behind me right here. That's Bitcoin and cryptocurrency. Very, very, very bullish. Ether now, Bitcoin, if you're not in it, it's probably a little too late. I have 5.5 Bitcoins, I think, that are locked into this Mt. Gox that I can't access because of the scandal that the hacking a few years ago. So I can't wait for me to gain access to that again. But Bitcoin, if you're not in it already, it's too late. I think it's a little late. We need some consolidation. Ethers, I think, is not too late, so I like that. And I like it higher to Ether's about $400 now, 417 I think. I like it to 800, so I'm expecting 100% gain in Ether over the coming months, not right away, of course. But without, let's go ahead and go over the watch list for next week. Here's what I got. ACRS, I played it already over here long. Stop under this bar. It got to $5, which was target 1, and target 2 trailed me out right here, I think, on ACRX, meaning the back half trailed me out. It didn't get to target 2. I would like to get back in it. This has a really nice monthly chart, transition A on the monthly. So the entry for this would be over this bar's high, which is 423. Stop under the base, which is $350. So the stop would be right here. Entry right here as a long-term play. This is a monthly transition A, as I just said. You know what I just took target 1 on yesterday? CYH. It's the same exact thing. CYH, we played it at here at 625. We just took half yesterday. Okay, at $10, around $10. $10 was exactly my target, but I trailed it, I think, at $9.90 or so. So just shy of $10. Why? Why did I play this? Transition A on the monthly. The ACRS, not as good, but it's the same thing. Now, target 2 for the CYH, I'm thinking $20. It's a longer term play. Okay? But it doubled in just a matter of few days. The CYH, ACRS, I think is not quite as beautiful for sure. But with the large stop, it should hold, I would think, and then end up working out not as a swing trade but as a long-term trade. Okay, next on the list is this AMTX, which has a 1-2-3 setup. I dropped a link to a video that I did on the 1-2-3 setup because it is featured prominently in today's watch list. There's so many items on today's watch list that are setting up as a 1-2-3 setup. You might say, what's a 1-2-3? I dropped a video, a link to a video that I did in the past explaining exactly what the 1-2-3 setup is and how to play it. Again, link is in the description for that. But that's a 1-2-3 setup. So the entry would be over 446, stop under $4 on the AMTX. CORT had that incredible bar. I mean, one of the biggest bars I've ever seen. The biggest bar is probably SPI, biggest bar I've ever seen, and it went from $3 to 46 in the same day. But this is one of the biggest bars also. It went up about 100%. Just the bar itself is about 100%, $12. So it's been it had that big pop and it's been digesting that move for a long time. Is it ready to break out? Maybe. I'm not quite sure because of the flat 20. So needless to say, it's not one of the ones that I'm going to play next week, but I will be watching it. I'm watching it every day. I'm waiting for it to set up so I can play it long, okay, on the court. EGO is gold, one of the strongest gold stocks. There's a lot of gold stocks that look good. EGO is one of them. BTG, I think, is not bad as a breakout, but EGO is more ready and has a 1, 2, 3 setup. So entry over that bar's high, stop under the low. Over 14.50 by 14 bucks on the EGO. NVCN is, this is a gap fade is what I call, and an hourly breakout. So the entry for this would be over 89 cents, and I would target about 110. Stop just under the base right here, so, which is 80 cents. Okay, so that's the NVCN. QRTEA has a 1, 2, 3. I don't usually like it when the first bar is absolutely humongous, which I think this is, but this has a 1, 2, 3 over 832 long, stop under 797. Solo is a 1, 2, 3. I'm telling you, I don't know why, but I have so many 1, 2, 3 setups. So this broke out already and now has it's not a very narrow range bar to be sure, but long over 390, stop under 346. Target up here at 5. Okay, maybe even $6 for target 2. SUNW is setting up as a weekly buy setup. It's not quite ready, but you see the weekly buy setup. It's not. I don't think it's quite ready because of the flat 20 on the daily chart, but I'm watching it. There's a lot of other setups, but I'm just sharing with you the ones that I think are more ready. Most ready. ENPH is a 1, 2, 3. Okay, amazing. This stock used to be, I remember trading it at $10, at $20, and now it's at 122. What else? There's so many. TUP is a 1, 2, 3. Okay, sort of. Zen is a 1, 2, 3. So many. 1, 2, 3, 4 on Zen. There's so many other. JD, super bullish. Look at this. 1, 2, 3, 4. Sort of. So there's so many ideas, but I try to limit the items that I share with you so you're not too confused. Of course, if you're a subscriber to my Strategic Swing Trader newsletter, I already picked out the plays that I am going to be playing tomorrow. You can log on to your customer portal account, T3 Live account, and go to subscriber resources and then find the newsletter there already updated, or wait until tomorrow morning at 8 a.m. You will get it via email, also emailed to you, okay? But you can, if you want to see which plays I will be taking myself tomorrow, feel free to log on to your T3 Live account now already. Now, AAOI had a tier 1 very, very bearish gap down on Friday. Yesterday. 2 days ago. But it didn't really, it dropped initially and then it didn't go at all. I had a call on it under 768 for like 2 hours open, never triggered. Now, I do like it short. I did like it as a day trade, but I like it also as a swing trade. Short right here, stop right here, okay? I don't normally play off the hourly chart. I play off the daily. But this was a very, very bearish gap, and I expect to see continuation to the downside. So under the base, stop above it, okay? I played the AA, I believe I did. It didn't move. It just didn't move after I got in it on Friday. But that's okay. By the way, this is last week's performance, $12,000, just last week, month to date, that was just last week. Year to date, right? It's not coming up. It's right here to the left, you can see it, it's 708, but I don't know why it's not coming up. So let's refresh one more time. Now it should come up. 708. That's pretty good. Again, open house next week if you'd like to join me. Totally free. Link is in the description. And that's Friday. At any rate, continuing on, AAOI, I like it under the low, under Friday's low, stop over 784. Next is BVXV. Mega gap down, basing at the lows. So I like it short under the base, stop above it. Under, I think, 260, stop over 325 on the BVXV. CATB, truth is, I want to play the CATB long, but I would rather play it long as a breakout, but it looks like it's going to break down. So I'd like to play it whichever way it triggers, but I prefer long, but it doesn't look like it's going to trigger long. So under the lows, stop above 143. Okay, under, I don't remember what the lowest low is, under 125, stop over 145, 20 cent stop. FE is a base breakout, or you can say 1, 2, 3, and then if we trigger on Monday or so, it'll be a 1, 2, 3, 4 setup. So short target is kind of limited to here. I would say that's 27.30, but $1.50 or so. So it's not one of the ones that I am gonna play, but I like it. It's not bad. IGT is a sell setup, so we have a downtrend, a declining 20, and a counter rally back up towards the declining 20. So short under the green bar, stop above it, under $9 by 941. KRMD is a 1, 2, 3, 4. Again, it's the same as the 1, 2, 3, but instead of getting one doji bar, you get 2 doji bars and then a continuation lower. So that's the KRMD. SNSS looks the best, maybe. It's $1.13. What can I say? I don't target the low price stocks at all for swing trading. I don't have a price parameter or a limit. I just look at for patterns, and a lot of these are low priced. The ones that look the most bearish are low priced. But you know what? If a stock that's at $1 or $1.13 drops to 50 cents, how much do you make? You make 50%. If a $100 stock drops $50 to $50, how much do you make? Also only 50%. So the price really doesn't matter. It's just that when they become low priced, people think, oh, then they're not going to drop anymore. That's not true at all. So short under about 110, stop over the base. I don't know what the high is, but you figure it out. Just over the base. And then last but not least is the TCDA. I made a good amount of money on it on this day, or I'm not sure if it was this day or that day. I think the day of the gap. TCDA, was that last week or the week before? I don't think it was last week. I think it was the week before. Yeah, it wasn't last week. It was in October basically. But now has a nice looking sell setup. You can see the breakout failure, broke out to new highs right here, and then it came right back down. So if it breaks under the base right here, so it'd be under Friday's low, 676, stop over 750. I like it short. Okay, so all right, I hope you enjoyed today's video. Again, if you'd like to join me for the entire week next week, totally free, link is in the description. But with that said, again, hope you enjoyed the video. Please be sure to hit the like button, and I will talk to you soon. Take care, everybody. Have a good rest of the weekend.